Good afternoon, everyone, and welcome back. I hope you enjoyed lunch and had a chance to connect with a few colleagues. Thanks for joining us here this afternoon, this portion of the AGM. Before we begin, just a quick note on how we will handle questions this afternoon. We will be using the Slido app to manage the questions you may have during the presentation. So if you look on the screen and scan the QR code, you can download the Slido app and you can put in questions as the speakers are talking. Alternatively, we have the two microphones where you can ask questions at the end of each presentation. This afternoon, we are hosting an interactive workshop titled Leading the Herd, Strategies for a More Profitable Tomorrow. Today's dairy environment continues to evolve with changing milk payment systems, increasing production expectations and ongoing pressure to manage costs while maintaining strong herd performance. Our goal this afternoon is to bring together several key perspectives that influence farm profitability. Over the next 2 hours, we'll hear from industry experts covering 4 important areas that directly impact the success of the dairy operations: beef on dairy opportunities, genetics and herd health management, financial management in a changing environment, feed and nutrition strategies that support performance and profitability. Our first speaker this afternoon is Key Jim. Key was raised on a seed stock and commercial cow-calf operation in interior British Columbia and earned his doctorate of veterinary medicine from the Western College of Veterinary Medicine in 1983. Over the past 4 decades, he has built an impressive career as a veterinarian, cattle feeder, and industry leader, founding GK Jim Farms and Feedlot Health Management Services in Otacox, Alberta, which has grown into a major cattle feeding operation across Canada and the United States. He has served in numerous leadership roles across the beef industry and was recently inducted into both the Cattle Feeders Hall of Fame and the Alberta Agricultural Hall of Fame in 2024. Today, Dr. Jim will share his insights on the evolving beef on dairy landscape and the opportunities it presents for dairy producers. Please welcome Key Jim.
Good afternoon, everyone. Today, I'm going to talk a little bit about everyone's favorite topic these days, beef on dairy, but maybe we're going to approach it a little bit differently. We'll just briefly review how we got here in this journey, and more importantly, where we think this thing is heading, right, in both directionally and for the near future and further on down the line. Before I start, I think it's important to recognize that the last 3 years in the beef cattle industry have been by far the best years that I've seen in almost 5 decades, right? So if you go back and trace it back further than that, I think it's safe to say that these are the best times ever, especially on the cow-calf side. If you look at things there, last year and this year, they'll probably make more money per head than they made in the last 20 in the aggregate, right? So if you, in the US, a lot of the figures I have are in the US because the data is much easier to track down, but in the last 20 years, the average profit per head in a cow-calf producer was $40, right, over that 20-year period. And last year, the average was $900. Right, so that's a 20-year aggregate profitability in 1 year, right? So it's pretty wild. To be fairly similar this year, and as I'm going to predict, it's going to be pretty damn good for quite a while, right? On the feedlot end of the equation, last year and the year before were record years in terms of profit per head, but we've had some pretty good years prior to that. In 2015, 2016, if you inflation correct them, they're about, they're quite similar. So yes, some very good times. And also on the, roughly on the dairy side, I think it's safe to say in Canada, things have been pretty darn good the last few years when you take the milk price combined with the BOD revenue. A lot better than your contemporaries in the US. and miles better than any of your contemporaries in the UK or Europe, right, where milk prices have fallen around 50%, right? So I think I know where I'd rather be if I'm a dairy producer today. All right, so just real quick on the beef industry supply chain, the left-hand side of this, for you looking at me, where we have the proportion of the cattle that enter the fed beef supply that actually come from the dairy side of the equation, right? As day-olds, formerly the Holstein male calf that went into a calf ranch system and then made its way into the feedlot. This has always accounted for probably more beef, fed beef than most people think, right, or realize. Both in Canada and US, it's anywhere between 17 and 22%, right? So every time you go to the store and you pick out a steak, in Canada, the US, it had a 1 in 5 chance of that in the past being from a Holstein steer, right? So it's been a very significant part of the production system. And in that case, the Holstein day-old was picked up by a calf runner, taken to a depot, and then shipped to a calf ranch. And then in the calf ranch, which I think you may or may not be familiar with, but basically they stay there in a hutch and are fed at least for the first 56 days by bottles, right? It's quite an amazing process, but that thing has not been mechanized yet. And then they'll stick around for another 60 days to 90 days in the outside pens, and then shipped to the feedlot, 300 to 350 pounds. And then they're on feed for another 12 to 14 months and slaughtered, 1350 to 1450. So that system was the Holstein system that would have been around for an awful long time, contributing significantly to the amount of total fed beef production. So then really what happened we had a perfect storm. If you want to look at that, in 15-16, you had a really major collapse in the price of the Holstein bull calves. And it all started when a major meat packer, Tyson, decided that they didn't want to slaughter Holsteins. And this also was combined with a sharp decline in the fed cattle pricing anyways, right? So you have a major packer saying, I'm done slaughtering Holsteins, and you had a precipitous drop in the price of fed cattle. Tyson said, well, the reason why we're doing this is because we are switching to a CAB-based program, and we want to focus on, high choice and prime type carcasses, right? So we can say, well, that's a fairly odd decision, but given the fact that there's only 3 major packers and they comprise 80% of the fed cattle slaughtered, it's a pretty big deal. At the same time, you've had the conception rate steadily improving with sex semen, getting pretty comparable in that time frame to the results from conventional. And then also underlining this, generalized improvement in repro metrics over time, meaning that you can have a lot less animals being bred and to Holstein genetics, and you're now able to breed a significant number to beef on dairy. That just gives you an idea of the extent of the collapse. It was kind of hard not to notice that, right? Going from $500 a head USD for a day old, very quickly down under $100. And you can see in that particular juncture in time, it didn't quite go to zero, but we bought lots of calves in Idaho as day olds at $30, right, in that time frame. So an unbelievable implosion, but that wasn't all due to the Tyson decision. It would have dropped anyways, related to the drop in the fed cattle pricing that in the last run up peaked at around $1.70. US, and then followed by cattle that got to under $1, right? So let's remember that number, right? The last time we had the cattle cycle peak, it peaked at 170, and when it when it was all done in that round, as you had the herd rebuild and everything occur and increased supply, you took it down to under $1. So that, in quick math, is 80 cents a hundredweight drop in the market, right? Which is what happened in that cycle. So subsequently, the BOD thing really did pick up. And the day olds, as you can even see today, there's a significant premium associated with a beef cross animal. And really, it's quite simple. Why does that occur? Well, because the crossbred animal has better feed conversion, better gain, better carcass traits, better health outcomes, and a higher selling price. Right, so all of that puts a significant spread between the value of a Holstein bull calf and the value of a crossbred calf as well. Same thing will occur for, not a big deal in Canada, but in the US, there's a significant number of Jersey animals. There's about 1.5 million in the aggregate out of roughly 10 million cows. And that delta is even greater in the Jersey animal, because the crossbreeding with the beef animal turns something that's worthless, right, into something that can be fed with value. So the delta is actually bigger, right, if you look at it that way. So what happened then is, obviously, the beef semen sales increased dramatically in the dairy industry. And just as a side note, when you compare it with, how many doses of semen does the beef side of the industry consume, and the answer is usually less than 2 million doses. And that's really confined mainly to seed stock type operations. The amount of AI that occurs across ranches and commercial cattle producers in North America is in a very big number. And so with BOD, though, the interesting thing is now this market is 10 to 12 million doses, and potentially even greater than that over time. And so now there is an incentive, economic incentive, for semen companies to invest in beef cattle genetics and to develop breeding programs analogous to what has become, unbelievable success in the dairy world. So if you look at this starting in 2020, and I couldn't find the data from prior to that, but this gives you the idea, right? You've got the number of BOD units in 2020 at 5.5 million, going up to 7.4, going up to 8.1, going to 9.7, going to 10 million. And then a slight drop in 2025. These are U.S. numbers. So clearly, you had a massive adoption of a phenomena unlike anything I've ever seen before in 50 years. Right, the rate of change, the rate at which this approach was utilized and adopted is kind of unprecedented in my career. Right, I've never seen producers get on something like this, but you've had the universal incentive to do so, which is called money. Right, so show me the money, and you got shown enough money, and it happened very quickly. Right, because over this time frame, calves in 2019. I was buying BOD calves for $125, and on the U.S. side, and in the last ones we bought last week, the average price was $15.25. So I think that's a 15x increase. I've never seen anything, go up like that, except my wife's horses. So there's very few precedents for that activity, right, in agriculture. I mean, that's an unbelievable increase, and it puts a major incentive for the adoption of the BOD technology. Again, unfortunately, I don't have the hard numbers for Canada, but anecdotally, in talking to people from Quebec, Ontario, etc., they would say that they would believe, and maybe you can confirm this, that it's at least a 40% of the calves that are born at dairies are BOD calves in Canada. So the interesting thing, okay, we've got very quickly to these extremely high prices for day olds, and it begs the question that everybody's asking is they're saying, well, you know, is this the top? Are we going to go higher from here? And you know, what does the future look like? So I'll talk a little bit about where I think things are headed. In some ways, on the more boring side, you know, BOD has potential to really, you know, continue to improve in the same way that everybody thought you were reaching the outer frontier of where you were going to get to on dairy cattle production, and you have not, because you've continued to improve it genetically. And so the same thing is going to happen on the BOD side as more companies get involved in producing better bulls. All of the metrics that are important to us, the gain of the cattle, the conversion of the cattle, the carcass traits, all of this stuff is going to improve. So from a genetic perspective, the calves are going to get, you know, more valuable over time. And theoretically, this can be facilitated because the dairy data is all linked, right? We can track an animal from birth to death and know who the dam was and who the sire was. So you can do this in a closed loop system where you can do this if you own all the components of the system, right? So you can make this work really well if you own the dairy and you own the calf ranch and you own the feedlot and you own the packing plant, right? That would be the ideal configuration. And you could, you know, because then for sure you've got all your data linked. In our case, we focused on making contractual relationships with dairies to acquire the day olds. We own the calf ranches, we own the feedlots, and at times we own packing capacity as well. So we can link up all the data, and we can make, you know, we can have a meaningful quantity of data going to the genetic companies and other service providers so that we can select bulls and we can really make some progress in this equation. I looked at it last night. We've got about carcass records on just under 1 million head since we started the BOD system. Just about 100% of that is in the U.S. Again, where we were able to make forward contracted or certain arrangements with producers to ensure that we get the calves, right? Because it doesn't work very well if you're running in the spot market all the time, right? In order to, because you don't know if you're going to get the calf or not, so that really doesn't work. And it's facilitated there because you have some very large production systems, right? That have a large number of calves, and you know there's lots of dairies that are between 20 and 60,000 head. Right, so you make one deal, the logistics work, right? All that kind of thing works out pretty well. But my question in this equation is for the semen companies that are getting involved in this and trying to breed better bulls. They're going to have a difficult time acquiring the phenotypic data, unlike the dairy system where that's essentially public domain. It's not in the beef cattle sector. There's a transaction. Someone's bought the calf, right? And someone may resell the calf. There's all sorts of ways that those links can be broken, and that you're not going to get the information properly correlated to tag at slaughter, right? So it's going to be, I think, a much more difficult task than it was in the dairy world, right? Because of the availability of the phenotypic data. It's a characteristic of beef cattle production, right, where you have multiple layers of transactions that occur from the birth of the calf to its arrival at the packing facility, and as a result, it's very difficult to make true genetic progress on the beef cattle side. So to summarize that, I think in closed loop systems there is going to be a considerable improvement in the type of calves that are produced. Outside of that, I say the progress is going to be limited because of the fact that the phenotypic data is not readily available. But more importantly, I know that everyone wants to know, okay, where's the cattle market headed? Or as a subtitle, why are cattle prices so high right now, right? And where are we going here? So if we look at the supply side, this story is quite interesting because both throughout North America and actually throughout the world, beef cattle inventories have declined significantly. So if you look at the U.S. and this year, under 30 million cows, I mean, that hasn't happened since the 1960s, right? So you've had this progressive decline from the peak, and it keeps declining, every year. Similarly, in Canada, from the peak during BSE, right, you've got a cow herd that's now under 3.5 million cows. So there's no doubt that there are less cattle. Contrast that a bit with the dairy cow numbers in the US that have ranged between 9.2 and 10 million for a long time, right? The variance is only about 800,000. And I think the same picture is true in Canada, right, where you've got 950,000 to 1 million cows. You've had a really big increase in the numbers. So number of dairy cows relatively static, number of beef cows significant decline. Yeah, so there's the dairy cows, so around 960. Yes, there's been a decline, but nowhere near the extent of the decline that has occurred in the beef cattle world. So the principal reason why supply has decreased, or why there's been less cows, is the answer is drought, drought, and drought, right? Everyone is saying, well, and lack of profitability. If it was lack of profitability, then people would have quit raising cows 100 years ago, right? Because they haven't been particularly profitable in the 50 years that I've been around, except for the last 2, right? And going ahead, right, that's a hell of a long time to wait for money, right? I mean, that's a long drought of profitability. The principal thing that affects cow numbers is drought, right? And that's because you're going to sell her when you can't feed her, right? Apart from that, the profitability thing is seemingly a moot point. The rate of return to the cow-calf operations in Canada, the US, doesn't matter which source you use, there's about a 1 to 2% return on capital, right? End of story. Doesn't matter how you look at it. So people say, well, why do people do this, right? Part of it is because of, there's always been a Yellowstone effect in the world, right? People want to be cowboys, right? And so that's not a new thing. That's an old thing, right? And the other thing that happens, the first thing what happens when somebody makes a lot of money in real estate, in a hedge fund, in Bitcoin, in real estate, you figure, doesn't matter what the source is, what's the first thing they do? They buy a ranch, because now they're a cowboy, but they can afford it, right? And that's what happens with the very large ranches in North America. They're not owned by cowboys, they're owned by rich people from other sectors, right? That's what happens there. And then the majority of the cows, contrary to popular belief, are not in large ranches. They're in very small farms of under 50 head, right? That are relatively immune to big fluctuations in pricing because it's not their primary source of income, right? So you have a bimodally distributed profile of the cow-calf thing. And just to summarize it, it makes very little money. And I grew up on one of those ranches, and that's the reason why I left, right? Because it looked like an endless series of poverty to me. All right, drought is the big deal. And there's been rotating drought across all the major cattle producing areas in both Canada and the United States for a number of years, right? And that's been the big factor. We had some relief from the drought in Western Canada here last year. and everyone's prognosticating as to whether we're going to, be looking at a different weather pattern here or not. And that is the reason why the rebuild has been slower than we would anticipate, is because people are going, man, I just went through this drought business, right? Are we gonna, line up for more of this? Or are we going to pay down a significant amount of debt, relative to our, our cash flow? So it's really that whole debate about whether you should get in the game. Because financially, if you look at end of Q4 pricing, since 2020, it's only been a 300% rise in the price of your calf, right? And maybe it's that prices are just too good to pass up. This fall, you had a 650-pound calf peaked at over $4,000, right? That's pretty wild. And a 1,500-pound cull cow, brings $3,500. I talked to one rancher, he said, I just didn't like her that much, right? I mean, 3,500, I ain't keeping her around. If she's anything remotely irritating about her, she's going to be dead, right? So this is the whole picture that the ranchers and these guys are faced with, is that you take this immediate major money, or do you bet on the future that you've kind of got burned a little bit by drought, right? And that's the dilemma, right? And also because of the residual drought, okay, I want to expand. Well, what do I need? I need to find some pasture. Well, that can be a challenge, right? Where you can get the pasture. Higher fixed costs. I mean, it's not all, it's not like costs haven't increased, but the margins have been pretty good. Other things cited are labor and age of producers. It always appears. I don't think those things are really relevant at all. I mean, the labor in ranches is you enslave your children, right? So, and you just don't pay them, right? So labor is not a big deal. Then they talk about, well, age of producers, right? Oh, producers are getting old. They've always been old, right? If you look at the subset that runs ranches and beef cattle farms, they're an older subset, right? And actually, it's in Canada, they did an interesting cross-sectional study to prove that the age of producers, beef cattle producers, really hasn't changed that much. And so it just reminds me of the story of these two old ranchers are talking, and this young guy comes up to him and he says, I want to get into I love these cows, I want to get into ranching. He says, so how do you do it? And one of them says, well, there's 3 ways, son, he says, of getting the ranch. He goes, it's the womb, the tomb, or the altar. Other than that, it ain't happening. Okay, right, so, all right, so when the rebuild starts, and remember, it hasn't started yet to any material degree, the figures that just came out in Canada would show that it's about a 1% change in the number of beef cows. So when it starts, it takes, of course, 3 to 4 years for the slaughter animal to appear in the system, because you got a calf, it's got to become a heifer, you got to breed it, it has to have a calf, and then you have to feed it out for another year, right? So you're not going to get an increase in supply, right, until a beef supply of slaughter cattle rebuild has to start. And if you look at historical cycles, when does the peak occur in the fed cattle market or in the feeder market? 2 to 3 years after the rebuild starts, right? So from the data, you haven't started the rebuild. So I fail to see how we're at peak prices here today. All right, the marketing picture. So who's making money in the beef cattle world? If you look at, again, these are USD figures, you can see that the cow-calf operator, I mentioned before, is rung the bell, $900 in 2025, projected to make over $1,000 in 2026 as we go ahead. Feeders have done pretty well. That's, it's not necessarily the greatest years ever, but it's pretty darn good from a feedlot side. And you can see here that the packer hasn't done very well. But if you'd extend that chart the previous 5 years, they had record profitability, right? So what happens when you have a compression of the number of cattle available for processing? The packer margins will decline and will decline significantly as we go forward. So you've got excess capacity. So what happens? The packers overcompete, right, to maintain plant occupancy or capacity. I say they bled pretty good for the last 3 years. Tyson last year reports a loss of about $1 billion for the beef division. They are a packer that has also slaughters hogs and chickens, and so that to a large extent made up for it. And recently, they closed one of their major plants in Nebraska in Lexington, and they took out half a shift in Amarillo. And as we go forward, the risk of additional plant closures is real, and that changes the scenario a fair bit, right? In other words, so I'll couch my bet a little. I'll say the peak has not occurred yet in fat cattle pricing, assuming that the packers don't reduce capacity by shutting down additional plants. They say they're not going to do that, but they haven't always followed up on what they said they were going to do. In addition to that, the other 20% to 25% of the cattle that aren't killed by the big three, JBS, Tyson, and Cargill, those plants tend to be single protein plants, right? They don't get buffered by poultry profitability and by hog profitability, which can compensate for, a lot of problems. So in my view, that's a major issue, right? Where you can get into trouble here if enough plants decide that they're going to close. The only good news is they went into it with a very big pile of money from the previous 5 years prior to that graph. So they had record profitability. Their balance sheets were strong, so they're going to the wreck in pretty good shape. But ultimately, when you're a large corporate entity, you don't burn money forever, right? You decide that you've got to make some changes, and Tyson was the first to blink. How are we going to do at the feedlot side? We're going to do, just as the plant is struggling to maintain capacity, less feeder cattle in the system, we're going to struggle to maintain occupancy, and we're going to overcompete. We're overcompeting significantly right now for your day olds relative to where the futures market sits, right? So you look at the futures market today, it's essentially $230 US out there for the next year. When you're buying a day old for $1,500 in the US, the break even is not $230. Break even is more like $260, right? So unless the market gets to $260, those cattle are going to have plenty of red ink around them. And for people that are not in BOD buying day olds and they're just buying feeder cattle in the regular market, they'll start to lose money about now going forward, unless there's a significant summer rally here in the fat cattle market. But it takes us a while to figure out we're losing money as feedlot operators, and we will bleed for at least 6 months and a lot of times longer before we materially change our behavior. And why? Because we are working on, we have a hotel, and one thing for sure is that if the hotel's empty, you don't generate any revenue, right? So that's a little bit of the problem with being in a fixed infrastructure business, right? Is you have no chance unless you have inventory, right? So now the other thing that's pretty interesting here is that corn has been relatively low. Feed costs have been amazingly low for the last several years. And so again, we've had a perfect storm here, right? We've had supply of feeder cattle being at an all-time low, and we've had corn, relatively speaking, very low as well on feed prices. Oh, sorry. Oh, there we go. Sorry about that. Yeah, thanks. Yeah. All right. So the corn has been a pleasant surprise in this equation, and the amazing thing about it is that you can say, well, wait a minute, you just told me you had drought. How in the hell did you grow such a big corn crop? Well, it's just a testament to farmers' ingenuity and the improvement in agronomic practices, right? You can grow a bloody corn crop on not much moisture if it comes at the right time. And the same thing applies to Western Canada. Everyone's going, oh, we're going into this, we're really worried about it. Boys, you don't lose a crop in February and March and April, right? You lose it if it doesn't rain in May and June. You get any kind of rain in May and June in Western Canada now, we grow a crop, right? And a big one, right? And the same thing is true in the corn growing areas. They've had reasonable moisture, not in abundance, but pretty good, and it came at the right time, and they've got a hell of a crop for the last 3 years. And projecting to have a pretty good crop here again, right? The weather forecasters, for what it's worth, are saying that we're headed into wetter weather, right? Now they're right at least 50% of the time. Bear that in mind. All right. Some of the other things that are potential headwinds as well is that the geopolitical risk has never been higher, right? Witnessing the events, the recent events, the war in Iran, the war in between Russia and the Ukraine, to mention some major things, but also in Canada, where we have heightened geopolitical risk because on the beef side, we are net exporters in one way, shape, or form of at least 50% of our product. Right, so anything happens on the market access side, and we are cooked in a big hurry. Right, we've got upcoming negotiations with Mr. Trump here, and if there's anything negative out of there, so if Trump says, okay, I'm mad at you guys, and rather than negotiate, we're just going to put a 10% tariff on everything. Right, that may be a simple solution. What does a 10% tariff do? Doesn't sound like much, but remember this, the price of a fat steer is $5,000 to $6,000. You take 10% out of it, that's $600 a head. And that $600 a head will come off your day-old price in a pretty big hurry, right? So there's a, GOP risk there big time, right? And we've got these various conflicts underway. On the input side, I mean, diesel jumped significantly. You've got, potentially fertilizer prices. Well, they have jumped, right? Not they might, they have. If you haven't bought fertilizer lately, you'll know this, and that's because the Strait, apparently 25% of all of the world's fertilizer goes through the Strait of Hormuz, along with a big chunk of the oil supply, which is why oil went from being $60 to $70 a barrel, and it peaked here on one of the overnights at $130. Right, which is unbelievable, right? I mean, you have a commodity double in price in like 19 hours, right? So all of this will have an impact on costs. It may impact the cost of production side, which ultimately affects your margin. So if cost of production goes up for conflict reasons, and notice that the grain markets did take a pretty big jump here when we were, when the war first started. It's backed off a little bit then, but if you watch the futures on your phone, and it's a very bad habit, you shouldn't do that. But if you do, you'll notice that the war news, things favorable for Trump, equities go up, oil goes down, grain goes down, right? And it's amazing how that synchrony occurs. So, we do have in Canada, as an exporting country for beef, a very heightened geopolitical risk, right? Because I can tell you that last year, remember when we had the 2-day tariff or the 24-hour tariff at 25%, it did apply to beef in that round, even though it was supposed to be exempt. The price of fat cattle changed $800 in like 12 hours. And then it went back again when the tariff came off, right? Theoretically, we should be exempt and beef cattle trade from, the negotiations, but you don't know. But the most amazing thing that I want to talk about is why are prices so high? I mean, there's the supply side, but there's demand, right? And this is, again, one of the most amazing stories and most unanticipated probably events that I've ever witnessed. I mean, I've lived long enough to when beef was and dairy products were the whipping boy of every nutritionist around, right? And everything was bad. Fat was bad. Butter was bad. Cholesterol was bad. Red meat was bad, right? All that, right? Which caused a significant decline in beef demand, right? That just wasn't much fun. But they were high enough that it got Trump's attentions, and he mentioned it in his State of the Union address. And interestingly enough, he also mentioned he was going to bring the price of beef down, which, unless he plans on buying a whole lot of cows, I'm not sure how he's going to do that, right? What he did was he decreased the tariffs out of Argentina, right, significantly. And that was, yeah, it was a little blip. That's like less than 1% of the, if you imported everything Argentina produced, right, it's not going to move the needle that far. And we've had a massive increase in carcass weights, right? So that has buffered the drop from the supply side, right? Because we've just put more and we've significantly increased the carcass weights. So if you add it all up, the demand picture is what's driving this, because the total amount of beef available in the market, when you take increased carcass weights and combine it with imports now from Australia, New Zealand, and Brazil, we've made up for the drop. So as a result, right, that's demand, right, which is just phenomenal. Because, again, for years and years, you'd have failed Ag Act 101 if you didn't know that beef demand is inelastic, right? Theoretically, when the price goes up, people will look at pork and chicken and substitute it, and it will cap the beef price, right? Over the last 5 years, this central pillar of Ag Act has proven to be wrong, totally wrong. If you look at, I just went to Costco last week, and have a look, right? So you've got pork chops are $7.39 a kg compared to over $70 for the tenderloin. That's quite a spread, right? Or you've got $8.99 for the actual chop versus a ribeye at $43, and this is Costco, right? So it's on. You could add probably $4 or $5 a kilogram if you went to Sobeys or a Safeway or something like that. So this is a pretty big spread, right? And the consumers have not said, no, we're not doing that. And if you look at it the way an economist would look at it, they would look at ground beef versus competing proteins and looking at the price ratios. And you can see here that the ratio has continued, that the premium that beef can be over chicken and pork just keeps going up, right? So that's pretty interesting. And then you look at things like another way, and I think this is one thing that we forget. We're saying, okay, well, this is really, this stuff's really too expensive. But remember, significant inflation has occurred over this time frame, right? So if you say, well, how long does it take a median income earner in the U.S. to buy a pound of ground beef? It's gone, it's 14 minutes, only a couple minutes increase over 2016, 10 years, right? So is it really that much more expensive when you look at it in that way, right? Not really. Now this is burger, but remember, half the beef in North America is consumed in burger form, right? So it's a big number. And so for a lot of them, they're probably not noticing it, the fact that in Canada, beef is over $10 a pound, right? And, $22 a kilogram, right? Seems high, but if you think about it in how long it takes you to work to get the pound of burger, maybe it's not that bad. Okay, why is beef demand so strong? Certainly, the quality of the product has improved dramatically over the last 10 to 20 years. And the simplest way of looking at it is on a chart where you're plotting the percentage of carcasses that grade choice or prime. especially on prime, you've had a dramatic increase in the average marbling level in the beef cattle market. And so I think we can just say the best tasting protein got better. And what has happened on the pork side is that they've made pork leaner and leaner, right? Less marbling, less fat, right? More difficult, not as tender, not as tasty. So demand, better beef, better grading, but also globally, you've got this protein craze happening, right? Where then this is not just in North America, and this is not just people that have a lot of money. There's, a general increase in health, in fitness, and consumers are seeking, high protein, nutrient dense diets. And if you look at it, I mean, just look at some of these numbers, right? Sales of dried meat snacks, 3.3 billion, right? 10% increases year over year in meat snacks excluding jerky, right? In the 2025 survey, meat sales reached a record of 112 billion in the US. So contrary to what you sometimes hear in the media, people are eating more meat, right? Every year, right? It's not declining, it's increasing despite increases in price, right? So that's just unbelievable, right? And you can say, well, what about millennials, Gen Xers, and all this kind of stuff? No, they're doing the same thing. 98% of US households purchased meat last year, right? 45% of the shoppers says they want more of it, right? So, this is pretty major, right? Also, you can look at it on the converse, what protein is failing? Plant, right? Any of you invested in this particular deal, fake meat industry, if you look at Beyond Meat from its peak to where it is today. So if you invested 10 grand in Beyond Meat at the IPO, it's worth $40 today. So that means you can only buy 4 pounds of hamburger with that investment, right? So it's unbelievable. Or whether it's Impossible Foods, all of these guys, they've destroyed a lot of equity, right? These plant proteins. The other thing we can't overlook is the GLP-1 drugs, glucagon-like peptides. They have brand names like Ozempic, Wegovy, Mounjaro. They help with weight loss, and the principal mechanism is they significantly curb appetite, significantly, right? And people lose a lot of weight on these compounds. I read an article there, they estimate that at least 3 million Canadians take GLP-1 drugs, which use the standard 10 conversion. That means you've got 30 million people in the US that are using this product, and this number is only going to increase, right? I believe it's Wegovy that's now available in the pill form, right? Those other drugs were injectables, and some people have an aversion to injecting themselves once a week, right? But they get over that with pill, and then the price of these compounds will come down. They're pretty pricey. When it first came out, it was about $1,000 a month, right, to be on these products, and they just come down exponentially. So I'm thinking that this is just going to continue to increase, and GLP-1 users, they will seek more protein because they want to prevent muscle mass loss as part of this weight loss, right? So they increase their protein levels. Their doctor recommends them to increase their protein levels to a minimum, I think, 35 grams a day or something like that, right? Big number. Super Bowl ad, right? I mean, Serena Williams, probably one of the greatest tennis players in history, saying that I need this weight loss drug to maintain my health, right? I mean, this is mainstream. This is not, this is not fringe. Big companies, Conagra, they've got a GLP-1 friendly label. What does that mean? It means it's high in protein. The other thing in the US, I mean, they've inverted the food pyramid. I mean, this guy, RFK Jr., is quite an interesting study in itself, right? Now, I can buy into his program on the war on processed foods, right? That makes sense to me. And you know, his comment is true. America spends 2 to 3 times more than any other country in the world on healthcare, and it's probably got the worst outcomes, really, where 40% of the society is obese, right? So he takes this 500-page dietary guidelines and he condenses it into about 10 pages, right? And the end of the day, it just flips the pyramid upside down and says, eat more fat, eat more protein, and eat more whole foods, bring on the butter, the saturated fats, the full fat milk, beef tallow. You know, this is pretty good news for everybody here in the room, right? I mean, this is a fundamentally different approach than the government has had historically, right? So we've got this significant political initiative in the U.S., and it just creates what I call free advertising, right? I mean, you've got the increasing skepticism toward ultra processed. You got a single ingredient advantage, right? When you've got the protein, right? That's why the plant proteins are failing, because if you look at a plant protein product, number one, they taste kind of ugly, but if you look at the label, it's longer than dog food, right? It's got a whole bunch of stuff in there, and people do not want that, right? Which is pretty clear by their sales. So did you ever think that you'd see the day where PepsiCo, the makers of Doritos, you got the high protein Dorito, 17 grams or whatever, 10 grams. Oh, and then they're going to build one that's going to have 17, right? So they're going to put more in it, right? So this is quite a phenomena, right? You've got Jack Link's, one of the major jerky guys, partnering with Doritos to have a Dorito flavored meat stick. It's just like not cartoons. I mean, this is like real life. Okay. The other thing that's happening that's really driving the whole thing as well is exports, right? I said that this is what's happening in North America, but it's happening in every other economy in the world, including the emerging economies, right? Not just the first world economies. This is happening throughout Southeast Asia, throughout China, throughout markets where you have more and more people entering the middle class than ever before in human history, right? They're estimating that over the next 5 years, you're going to have more people in the middle class in China than the entire population of the United States, about 350 million, right? So you've got another U.S., right? Essentially, you know, wanting to buy beef. The number of consumers that can afford beef keeps going up in the export market. Maybe it's a bit optimistic, but I've been spending a fair bit of time traveling here in the last couple of years, and the importers in China, they say it's going to double over the next 5 years. The amount of beef, China's already the largest beef importer in the world by far, right? And they said, we ain't seen nothing yet, right? Because it's going to double. So if this is true, if the export market continues to be as strong as it has been historically, then we are not going to get a traditional cattle cycle, right? Where we overproduce, right? And our price goes down because of supply and demand in North America, right? These export markets could eat up the product pretty successfully, and they could absorb increased production quite readily if any of these numbers are remotely close, right? Because in the historical cattle cycle, the exports have not been a big part of the equation from a pricing perspective, right? They've always been an alternative market at a much lower price than our existing market here in North America. And the other thing to point out too, this is demand for high quality grain-fed beef. And there's only 3 places in the world you're going to get it: Canada, the US, and Australia, in any quantity, right? So that subset of the market it's only our supply that can get into that market. So there's a lot that say the world is different now. There won't be a traditional cattle cycle where you have this precipitous collapse like we did last time from $1.70 to 95 cents, right? If you take that same percentage decline, right, and apply it to today's price, that's a pretty ugly number, right? That makes your day-old worth about $300 in Canadian terms, right? So, you know, there's at least a 50-50 viewpoint out there that this is not, this it's going to be different this time. The only caution I have to that is that the previous 9 times, of which I've been involved in 4 of them, yeah, it ended the way people predicted, right? With a very significant decline in price, right? So that the cycle did occur. And if you plot this back in time, you know, the beef cattle cycle has been one of the most predictable, consistent commodity cycles that there's ever been, right? So one side of the equation would say it's different this time, right? For one thing, the peak hasn't occurred because the real supply constraint lies ahead. As people start to retain heifers, there will be less supply available in the future. That is a certainty, right? There will be less supply. Will there be the same pricing? Now you've got the list of potential things that can interfere with that. Big run up in the price of corn. You know, corn got to sub $4 in the US here about 3 or 4 months ago. It got a 3 in front of it. I remember people saying that will never happen again. It did. And I've also fed cattle when corn's had an 8 in front of it, and people said that will never happen again. Well, never's a long time, right? And we will see $8, $9 corn at some point in time. I just don't know when. And when you do, your day-old price, these from the time they're born to the time they die, the average B&D animal will consume about 120 bushels of corn, right? So you do the math. For every dollar corn moves up, it takes about 120 US off the price of your day-old. So, you know, that could interfere with things dramatically. All of these geopolitical events and these black swans that are seemingly rare but occurring more frequently, right? You know, who's going to be able to predict, you know, what Trump's going to do, right? One guy didn't, you know, he had a pattern of, you know, they had this term in the US, the Democrats, they said, oh, Trump's like a taco. I'm sure you've heard this. Trump always chickens out, right? At the last minute, he won't make the dramatic changes he talks about. You know, the Greenland thing is an example, right? But I think there's at least one Iranian that probably wouldn't concur with that theory, right? He didn't chicken out, right? He went, and contrary to what, you know, people were pretty shocked when he pulled the trigger on the Iran thing, right? So it's pretty unpredictable. You know, what about Cuba, right? I mean, Cuba's looking, you know, like there might be the next, when he's told him you need to change your president, right? Or I'll come change it for you, right? I mean, we're in a different world, right? I don't imagine that the president of Venezuela thought he'd wake up in Washington, D.C., right? So, I mean, we're living in a world that we have not seen before in terms of what can happen geopolitically and the consequences of what that does to the commodity markets, the beef market, and all these things. I just don't think you can calculate, right? It's got way too complex, way too many permutations, way too many what ifs, right? How would you be able to tell that, you know, that this is what was going to happen? Right? I don't think you can. So if you ignore geopolitical, things look really good to me, right? Because I know supply is going to go down, right? And I know it feels to me very strongly that demand in North America and everywhere I travel in the world, demand for beef is unbelievable. All of the high-end steakhouses throughout the world, take a number, stand in line. Right? Unless you have rezos, you ain't getting in, right? So this is so good, right? You know, the picture that I'm seeing, and history has taught me when things look so good, something ugly happens, right? It seems inevitable, right? Where you get so bullish and you get so, wound up in what you're doing, and then some unforeseen event happens. But the combination of the decrease in supply that we're still going to have, combined with demand and combined with the export demand, right? I think we're in great shape, and I'll boldly predict that higher prices are coming for your day olds, which I'm sure will make you all happy. All right, I'll close there.